He mentions, I think we will look back in a few years' time and realize sanctioning Russian FX reserves was every bit as big as Nixon closing the gold window in August of 1971. Well, hello there, my friends, and good afternoon. Chris Marcus here with you for Arcadia Economics on another record-setting day in the gold market as we have hit another new all-time price. And silver rallying as well, and certainly a lot happening following on the heels of the BRICS meeting last week, and a lot of news that has been coming out. Certainly, thank you to Vince for covering much of that in depth on the morning shows over the past week, especially as I was traveling this past weekend, but a lot to go through. So we'll be moving through these quickly today to try and cover it all and keep you moving and on your way in a short period of time. But as you can see here, there is gold right now at 12:13 p.m. on Tuesday afternoon on the East Coast. We have 27.79. Silver rallying again up to 34.40. So not far off from that $35 market cross last week. I believe the high there was 35.07. And as we see in the gold chart here, 52-week range, the high 27.83, which is what you see right there just a little while ago. So gold in new record territory. And why could this be happening? What could be going on? Let us dig in. And we will start with a quote from Luke Gromen, who posted this on Twitter. And I think is well said, as he mentions, I think we will look back in a few years' time and realize sanctioning Russian FX reserves was every bit as big as Nixon closing the gold window in August of 1971. And the U.S. just told the world to buy gold. Seems like they are also getting that message as we are about to document. And first of all, this was coming from the World Gold Council. Just reason number one, you do have a little history on your side here. Here we see gold's return over the past 50 years has been in line with global GDP, well above inflation. Again, they are using the CPI metric here. And certainly, I believe, as do I think many of you watching, that actual rate of price increase certainly well in excess of that. But here you see the 8% for gold, which we're not talking about something that has just gotten clobbered ever since this has happened. This is from 1971 to 2023. And even silver, I know you have those two spikes in there, but as we have detailed before, won't get into it today, but silver, when you remove those spikes, which were relatively short-lived, especially in 1980, a little less so in 2011 and then into 2012. But if you remove those, you get a not entirely dissimilar chart from what we see on gold here. And as Mike Mahari reported, who may be doing an interview with soon, so certainly appreciate his research, and he noted how gold has overtaken the euro to become the second largest central bank reserve. That happened a couple of weeks back, beginning of October. And in terms of some other gold comments, obviously, we've had other well-known investors who have come into gold recently, but have a few more on board in the past week. So let us take a quick listen to hear what Paul Tudor Jones had to say.
Line item except Social Security is larger than defense spending.
Given all of the things you're saying, are you off buying gold and Bitcoin and
I think all roads lead to inflation. We're going to end up But
does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out and you have a small tax on the consumer.
So there he just said it. The way out is you inflate your way out, which probably has a lot to do with his feelings on bonds that he mentioned there. But don't worry, there's more, because here we'll take a look at the comments from Mohammed AlArian.
Gold is up more than 30% this year. Now, I got Mohammed AlArian as a warning about those gains. He says that the rise is unusual given the strong stock market, and we should take note of this. Mohammed, I never thought of you as a gold bug. I never thought of you as one of those people who sort of got all hot under the collar about gold. But when I read
One of those people, of course.
your article, you're suggesting that actually this is telling us something wider about what's happening in the economy structurally.
Yes, Richard, I'm not a gold bug. In fact, I don't own any gold, unfortunately, given the 30% plus gain. What's happening is that the movement in the gold price has decoupled from its economic and financial influences. There is something else going on, and what's going on has a geopolitical angle to it that is overwhelming the economics and the finance. It goes beyond just market forces. It's something that speaks to people trying to decouple from a dollar-based system. And that's because people have lost trust in the ability of the US to be a responsible steward of the international system.
All right, so there you're hearing it from Mohammed AlArian, well-known fund manager, not just my opinion or gold or silver bug's opinion, but that's the message that he's saying that is behind this. And is he correct? Well, it turns out that he is. Here was one that I mentioned briefly with Steve Cope last week, but we had central bankers making rare comments in favor of a bigger gold stash. Here from Joaquin Tapia, Director of International Reserves at Banco de Mexico. Given the context we are facing right now, lower rates, political tension, U.S. election, a lot of uncertainty, maybe the share of our gold in our portfolio could be increasing as well. Then we have Enhin Atar of Mongolia, who says in Mongolia's case, I expect that reserves will continue to grow, and I also expect the share of our gold in our reserves will likely increase in the future. And Marek Sestak of the Czech Republic says, I completely agree as well. And in terms of signs of action behind that, here, this came out last week, Hong Kong to bring in measures to boost gold trading. Hong Kong will roll out several measures with the aim of becoming an international trading center for gold and other commodities. Policymakers plan to increase gold inventory facilities and accelerate the development of related businesses such as trading, insurance, and logistics. This came out right before last week's BRICS meeting. And of course, as that was happening, we got the news that Russia is in talks with BRICS over precious metals exchange, certainly something that we've heard speculation of over the past 2 years, but now seeing this announcement again on the final day of the BRICS meeting, as Reuters mentions that Russia's in talks with other BRICS members about creating an international precious metals exchange to ensure fair pricing and trade growth. So just sharing the actual language that is being used here. And of course, from an American perspective, this was in the new chart pack released by In Gold We Trust. Great quote from Alan Greenspan, who views gold as the primary global currency. This is the only currency, along with silver, that does not require counterparty signature. So interesting to see the maestro also comment on silver there. And then, of course, right after the meeting, this was something that Vince Lancy of goldfix.com shared. IMF blows up the BRICS M-Bridge. Bloomberg reporting that the BIS is considering shutting down its M-Bridge cross-border payments platform after Russia's President Vladimir Putin spotlighted its potential to evade U.S. sanctions and disrupt dollar dominance, especially as he proposes a BRICS-exclusive BRICS bridge system. So in this morning's video, again, Vince talks about that's what the IMF is doing. Will that derail the project? He does not think so, and certainly will be interesting to see what comes from the IMF and M-Bridge in the days and weeks following this. But right after the meeting, again, you hear the BIS stepping away from the M-Bridge project. Although at the same time, again, right in the middle of the meeting, we had HSBC Hong Kong joins China's alternative SWIFT global payment system, and that is the CIPS, China's cross-border interbank payment system. And this move will make it easier for overseas companies to trade and invest using China's currency by making those payments faster and cheaper, which is something that certainly was all over the documentation regarding the meeting. And now, in terms of some things that actually came out of the meeting, here was from the Q&A session. And Putin here, when asked, could you please share the details about financial cooperation between BRICS countries? Was a common investment platform discussed? was the creation of an alternate payment system, an alternate to SWIFT brought up. And he says, speaking of SWIFT or alternatives to it, we're not creating any alternatives to anything, but settlements are indeed a critical issue, which is why we're using our respective national currencies, which is a well-known fact. Regarding payment systems, we are using the Russian financial messaging system created by the Central Bank of Russia. Other BRICS countries have their own systems. However, we are not inventing a separate common system since we're doing well with what we have. So certainly his comment there would suggest that they are not up to anything. That would also be somewhat in direct contradiction to what is on the BRICS Pay website, where they did a demo the week ahead of the summit. And here you see BRICS unit under discussion with the link, which goes right to the unit paper, the unit foundation white paper, which is where you see the reference to the 40% gold backing. I've talked with both Matt and Vince. We did a live call last Monday going over what they were expecting. And one of the I was reviewing that this morning. One of the things that both of them mentioned there was that coming out and overtly announcing it is a bit of a staking your sword on it and a threat to the West, which we've already seen in what I mentioned about the BIS, them already pulling out. Matt also felt that if you're doing something like that, what message, if you're sending a hostile message, what does that say to new participants? And I did check in with Matt, and he mentions that they're going out of their way to not offer the IMF in the West a boogeyman to attack. So mixed commentary from Putin. I wonder if there's some degree of semantics involved. My own gut feel is that whether they're putting labels on these things, certainly there's enough progress in the background to suggest that some of these plans are being moved forward. Here was the document for the improvement of the international monetary and financial system. This came out just prior to the meeting. And if you go through the document, you can see a lot about the plans and arrangements they're making to facilitate cross-border payments. And I'll just read this excerpt here. This was about reserves, and they mentioned one of the ways to reduce reliance on the US dollar as a core share of international reserves is by offering viable alternatives that would allow states to diversify their reserve currency portfolios. This involves making other countries' currencies or a basket of such currencies more attractive as a store of value. And if you go through the whole document, you can certainly get a good feel for the types of things they would like to have happen, which sometimes seems a little conflicting with some of the various comments, although in terms of does the unit exist and is it something that is under consideration, I still look back to that one. And I suppose there's some degree you can make different interpretations of what Putin is saying or exactly what stage this whole thing might be at. Although, again, I'll link at the end of this call to the live call we did last week, which I think especially following the meeting would be helpful in terms of putting some of these things in context. And another development that happened at the meeting was the BRICS added 13 new partner countries. And here you can see the list of those 13 countries. Indonesia, Malaysia, Turkey is in there, who has also been a big gold buyer this year. Although, meanwhile, back in the West, how are things going here? Let's see a clip of something amazing, truly special that happened last week.
Policies will dent global growth. Can you elaborate more on the near-term economic impact of these policies and over a longer time horizon? How concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Treasury symbol just falls off when asked about the health of the dollar. So I'm sure many of you have seen that, but in case you hadn't, hopefully you enjoyed seeing it again. Here's another note from Luke Gromen mentioning that in 2001, the CBO projected a $5.6 trillion cumulative surplus over the following decade, although instead we got a cumulative deficit of 6.1 trillion, a swing of 11.7 trillion. So keep in mind, this is for both Trump and Harris, that when you see the budget numbers come out, you may want to take those with a grain of salt. Especially when you have things, this isn't just the US, but apparently about 41 billion in world climate aid has gone missing, which reminds me a little bit of how the Pentagon had $2.3 trillion of undocumented adjustments that were really never found. Groups that were responsible for finding it were blown up on the following day, September 11th. So here we have a report from Oxfam disclosed that up to 40% of the funds allocated between 2017 and 2023 cannot be traced. Guessing we will not hear detailed analysis of that ahead of the election, but here is Reuters mentioning the same thing, and that according to Reuters' analysis of documents from the world body, a funding gap that diplomats said could impair international climate dialogue. So we'll see how that shakes out and if that government-funded money is ever found or used appropriately. But again, the type of thing that landed us in this situation where the debt is soaring, and we have all these dynamics that have led many countries and a good portion of the world to look towards gold. And in some ways, regardless of what the status of the unit is, I think you can see the trend that is heading towards gold and some backing for currencies that we'll see how the details unfold, although I just don't see how that is ultimately getting resolved in today's current environment. But anyway, that is the news for today. Although one final note before we wrap up, I did want to pass along some comments from Steve Cope of Silver Viper Minerals, who did join us on the show last week and is working on getting financing in place. Do have some news of note, and we will play some comments from Steve here real quick.
I mean, I have to be careful what I say exactly, but even before share price increases, we've been, we were working on looking at the potential of doing a joint venture on the project, and we're certainly still interested in that approach. And we've had, different groups from around the world approach us on looking at that, and they've been diving into our database and looking at things. We've also been approached at now, even in the last couple of weeks, there's been some attractive offers on a different way of going about things with the possibility of mergers. And then obviously if the share price increases, another option for us to look at would be financing it ourselves and continuing to explore and do it. So it's nice to have the options. We'll see what makes the most sense for our shareholders moving forward.
So there is the latest comment from Steve, and that is the latest gold and silver news as we finish up here. Hope you're having a great day out there. And again, if you'd like to review that call I mentioned a couple times that we did last Monday, well, that one is coming your way now.